Hi, so this is a continuation of our discussion in our last video lecture. So after the journal entries, after the posting, trial balance, now we move on to the preparation of the combined financial statements. Again, we reiterate that as provided in the new conceptual framework, chapter 3, um, you have combined financial statements for entities which is not governed by parent subsidiary relationship. And so this home office and branch, they are not separate and registered entities. They just, both of them or more branches, as the case may be, they constitute just one corporation. So a branch is just an extension of the home office. As such, they are required to prepare only one financial reports. So as emphasized here, you have preparation of combined financial statement, shipment. Okay, shipment is at cost. I emphasize it here because later we'll have shipment at billed price, and that will probably include, or rather, that will include additional journal entries. Okay, so what are the procedures in the preparation of the combined financial statements? Again, home office together with all its branches constitutes just one legal entity. So, single financial statement is prepared, and for this purpose, the separate financial statement of home office and branch are combined. So, the rules: number one, these eliminating entries, are all done in a working paper, meaning um, after you're done with the preparation of the combined financial statements, the financial statements prepared by each of these entities, the home office and the branch, still exist. Okay, because later on we're going to have eliminating entries, eliminating reciprocal accounts. So many are confused. What will happen after the eliminating entries? Does it mean that the accounts home office or the investment in branch account does not exist? What will happen? Will cease to exist. So what will happen next year? Okay, so just to emphasize, these eliminating entries that we're about to do are written in a working paper. They are not recorded in the books of either branch or the home office. So number one, what we do, we prepare a working paper, normally a worksheet. Then we write the accounts for both home office and the branch. So all accounts having a debit balance will be written on the debit side, and then you have the credit balance on the credit side. Right after, the reciprocal accounts are eliminated. So as what we have discussed in the previous video session, you have investment in branch and home office current, the branch current and home office current. Being reciprocal accounts, they should be equal to each other and thus should be eliminated in preparation of the combined financial statement. In the same way, shipments to branch is also close to shipments from home office. And because we are dealing with shipments at cost, necessarily both of these accounts should also be equal. So for an illustrative example, we'll have this. So for the illustrative example concerning preparation of a combined financial statement, we're going to use a problem adapted from the book of Sir Sir Peralta and Sir Guerrero. So I'm going to flash the problem for a bit on your screen so you can take a screenshot, or you can just click the link below and you'll be redirected to a photo of the problem. Okay. So you have CG Corporation, who has a branch in Davao City. So you have a home office in just one branch. And then you're presented with trial balances of both home office and a branch. So there are three requirements. Number one, closing entries for the branch, closing entries for the home office, including the entry to record the branch net income. And the last one is to prepare a combined working paper. So what we're going to present here are the closing entries. As for the working paper, we're going to do it in an Excel. Okay, so letter A, first we're going to close make a closing entry for the branch. So in branch books, okay. So when we close, we put the accounts on their opposite balances. So for you have sales for the branch, that is 145,000. Now if you are going to examine the trial balance, you will notice that there are two inventory accounts. This so you have the beginning inventory, then you have the ending inventory. In order to establish the new inventory, the inventory end, so you debit inventory and December 31. Okay, December 31 amounting to 60,000. And of course, you credit the inventory beginning. That's how you close. Inventory January 1 amounting to 18,000. So other items, you have purchases. There are no purchases for the branch, so we skip purchases. You have shipments from home office. Shipments from home office 145,000. And then you have expenses amounting to 20,000. So we compute the income summary or the net income of the branch. You have income summary. So 145 plus 60 minus 18 minus 145 minus 20. So you have 22,000 for the income summary. And then later, we close it to our capital account. Since we're talking about the branch, our capital account for the branch is the home office current. So we debit home office or home office current. In this case, the problem used the account home office, so we are going to use the home office account. Sorry, not debit. Instead, it should be credited. So you have debit income summary and credit home office amounting to 22,000. So that is how we close the books for the branch. So now we move forward to the home office. As for the home office, same thing. We close sales. Sales for home office amounts to 560,000. And then we establish the inventory. The remaining inventory on December 31 is 90,000. Credit inventory beginning. And that amounts to 45,000. Okay. Inventory beginning. Then you have credit purchases. So you have purchases amounting to 540,000. You have expenses of 90,000. And then you have shipments to branch. So since shipments to branch has a normal balance of credit, then we're going to put it on the debit side. Shipments to branch amounting to 145,000. If we're going to look at shipments to branch, it has the same amount with the shipments from home office. Because again, we're still dealing with shipments at cost. Later, we'll have shipments at billed price, wherein shipments to branch and shipments from home office would have different balances. So now we get the balancing figure, credit or debit to income summary as the case may be. Okay, so we have 560 plus 90 plus 145. And so we have an income amounting to 120,000. So what would be next? So we close this, we have the income summary, and then to record, because it states here, the entry to record the branch net income. So we debit to recognize the income of the branch, which amounted to 22,000, yeah. So we debit investment in branch, credit, this is Davao City branch. Branch income Davao, 22,000. So this entry is to recognize, the return of your investment, which is the branch. So you record the income of the branch in Davao, you debit investment in branch, thereby increasing your investment account. Finally, we still have to close this one to income summary as well. So debit branch income Davao, 22,000, and then credit income summary, 22,000. So all in all, your income summary would have now a total of 142,000. So we closed income summary, finally to retained earnings. So debit income summary, 142,000, and then credit retained earnings, 142,000. So that ends our closing entry for the books of the home office. Okay, so we are asked in requirement number 3 to prepare a combined working paper for the combined financial statement. So before we do that, we must have the eliminating entries. So in eliminating entries, what we have to do is we just close or we eliminate the reciprocal account. So in here we have home office and investment in branch, both having 70,000 balance equal. So debit home office is a normal credit balance. So in order to close it, you put it on the debit side. And then as for investment in branch, credit to close it, 75,000. Next is shipments to branch and shipments from home office, both having a balance of 145,000. The other one is debit, the other one is credit. So in order to close, we debit shipments to branch because it has a normal credit side, credit balance 145,000, and credit shipments from home office, same thing, 145,000. Right after, we're going to post this eliminating entries in our worksheet. So you have home office, a debit of 70, sorry, that's not 75, but this should 70. So a debit of 70,000, followed by investment in branch, credit 70,000. Then you have the shipments to branch, 145,000 debit, credit of shipments from home office, 145,000. As for this amount, so this is what you need to do in preparing the working paper. Just copy all the accounts, classify them into debits and credits for both home office and branch, and then you just write their balances. So you have from home office, you also have for the branch. Okay, then you just forward it to the income statement and balance sheet. So you have, first we'll do the income statement. So for inventory has a normal debit balance of 45, sum of this. Then you also have purchases, forward, purchases. Shipments from home office is eliminated. You have debit and credit, so 0. Then you have the expenses. Okay, and then you have sales. on the credit side. Shipments to branch is eliminated. Credit, debit, 0. So that's it. We get, oh yeah, we still have the ending inventory. Put it in the credit side, opposite to the beginning inventory. Sum. And so we get the net income. So total credit is, and you have total debit. So the income is difference between both. You have credit minus debit. We have a combined net income of 142,000. So if you will remember the journal entry we had, income summary had a total of 142,000. And then we forward it to the credit side because that is a capital account. Then for the rest, you just copy. So for cash, that's a debit. Same for AR. We now have the new inventory, which is this 150 debit side. And then investment in branch is now 0. So home office debit, you had eliminating entry of credit, so 0. Equipment, you only have one equipment in the home office. Purchases is a nominal account. Shipments from home office expenses. That's it. For the credit, you have accounts payable. Home office is now 0, eliminated. You have capital stock. Your updated capital stock would be this. Yeah, capital stock, and then, I'm sorry, your updated retained earnings would now be this. Plus this, 142,000. So shipment to branch, total credits. Okay. So check if total asset is equal to your total liabilities plus capital. And very good, 371,000. Again, your updated retained earnings is a total of you add 142,000 and 144,000, you get 286,000. And right after this, you just prepare a formal income statement and balance sheet in accordance with. You can have the report form, you can have the account form as for income statement, you can have the functional, what do you call this? Not natural form and a functional form. Okay. So for further examples about preparation of combined financial statement, I encourage you to read the book of Sir Milan, Sir Dayag, Sir Guerrero, and Sir Peralta.